Hey guys, in today's video, I'm going to be showing you how I made $30,000 last week trading SPY options and gold futures.
So yeah, let's begin with the SPY options trade where I made $11,000. So this trade took place on August 5th, and yeah, let's break it down. So the first thing that you want to do to, well, have a successful day as a trader is to have a pre-market plan. Having a set pre-market plan is the most important thing that you can actually do as a trader who trades options. Now, so today what I did was I wrote down my pre-market plan. So we had SPY resistance at 632.70. So what I did was I went ahead and I marked that resistance right here, and then the low of the market was around right here at 631.20. And with these levels, what you can do is you can get your edge and your bias once the market opens and see where price actually tests, where it rejects off of, bounces off of, and all that. So yeah, and during the pre-market, we did form a bearish fair value gap, which I'll go over later. And then of course we did have high caliber news. So that day we had PMI releasing at 10 a.m. And yeah, so let's see exactly how I got the edge. So once the market opened, or actually during the pre-market, going back to that fair value gap, it was spotted right here. So right here was where that bearish fair value gap was, and during the market open, I expected it at some point to return to that fair value gap and see where price goes from there. So as you can see during the New York time, once the market opened and everything, price did go down to test that low of the pre-market low, and of course it bounced right off of it. So right there, I kind of got the edge that at some point within the next 1 hour, 2 hours or so, we are going to return to this bearish fair value gap, and we do have that red caliber news. Um, and so yeah, so we did play into this bearish fair value gap, and that's exactly when I took my put position. And about maybe 10 minutes later, that high caliber news did release, and as you can see here, it didn't. The data that came out, it wasn't good. So PMI came out at 50.1, but we were expecting 51.5. So that's obviously not good for the markets, and it did turn into a bearish mode. And so yeah, so that's when I bought the puts right here at the bearish fair value gap, well before that news was dropped. And then of course, once that news was dropped, that was more of a sign that we are gonna go low today, potentially 1% day. And so yeah, now where exactly did I sell? Because this this is a little too perfect, obviously, seeing it on a chart. So if we do go back to the 15-minute time interval and we go back to the 5th of August, as you can see, during the previous day, we formed a major fair value gap right here. And so once price did come down to that fair value gap, that's when I sold the puts. And that's exactly how this trade went. Um, Now, with trading options is a lot riskier because if price did move in the opposite direction than your contract was hoping for, even just a tiny bit, that's a lot of premium burned right there. So what I did was going to my trading journal. This is TerraTrade. I created this platform. Um, Going here, you can see that I traded 100 contracts. Usually with SPY and QQQ, I would trade around 400 to maybe 500 contracts. Today, I wanted to play it safe because of the red caliber news that we had. And yeah, and as you can see, this is the trade candle, exactly how the trade went, what was the highest point, the open, high, low, close. And yeah, so the highest contract price that we went to was 1.91, and the lowest contract price was 0.81. So in Total, this was a pretty good trade. And as you can see, my R multiple was 2.79. Now, your R multiple is a very important factor to look at when you trade. Now, me personally, I prefer looking at profits, but sometimes you do have to take a step back and really focus on the R multiple that you're producing. You could be a very profitable trader, but if your R multiple isn't as good, then you are risking a lot just to make a little, and at some point that system is going to fail. That's what I learned. Um, so yeah, and then the strategy, of course, you can call it the pre-market support resistance break, or you can call it the opening range breakout. And yeah, so that's all for this SPY trade, and let's go over the two gold trades that I placed. So this is where I had those two gold trades. Now, recently, if you haven't been trading gold, gold has been moving very bullishly. It's been in a constant uptrend, and yeah. Now today so as you can see during pre-market, we did have this high here and it got rejected. And what I did was I went ahead and I charted this key level. And as you can see at around 8:30 again, we tested coming back to this high, this bearish fair value gap, and we rejected again. Now, once New York did open, we tried to break through this recent high formed, and of course we rejected it. And so during this point, I didn't place any trades. I wanted to just watch and see. And then between about like 11 in the morning and 3 p.m. we were trading choppy, so I didn't really want to place a trade. I wanted to wait till we retested that key level again, and as you can see, close to New York close, we did actually retest this high, and we actually did break through it. So that's when I got my bias that price will be moving higher and we will be retesting 3,500. The 3,500 has been broken a couple times by gold. There's very hard resistance up there, and yeah, so that's how I got that bullish bias. Now, once the futures did close at 5 p.m., I waited for it to reopen. If we go lower to the 1 minute time frame and we go back to that time, the first green candle that formed when futures reopened that day, that's when I bought, and my stop loss was the bottom of the gap created between the close of the previous day and the open of the current day. And then as you can see, we did come up to retest 3,500, and there's a large buy order place which caused price to spiral out of control. It went up to 3,500 at 34, and once it hit about 3,520, that's when I sold, and I got filled a lot lower, but I still profited a lot. So in total, it was a pretty good trade. And then, so as you can see, price did drop from 3,500 because it was another rejection. If you go to the 4-hour chart, actually, you can see that when gold tries to test 3,500, this is major resistance for gold. So that's where I got that exact bias from. Now, later during that day, actually, what I did was I played shorts. So once we opened again the day after, these key levels right here were tested 5 times in total. On the 5th time, that's when I got into shorts. Now, why did I do that? Here's a perfect example. So right here, during New York pre-market, we formed a bearish fair value gap right here. Now, pre-market fair value gaps, expect them to be hit. This has been how I've been trading for years, and it's worked out for me most of the time. Now, once New York did open, I expected again, just like that SPY trade, for price to test out this fair value gap, and we did, and we couldn't close above it. So that's when I took the entry and I placed my loss on the high of the rejection point of these candles right here. And as you can see, we quickly went down, favoring this bearish fair value gap, and I set my take profit to right here, this support point right here, and yeah, it worked out perfectly. Um, so yeah, that's a brief run of my two gold trades. As you can see right here, we went from being very bullish to having a very bearish day. And currently, present day, Monday, August 11th, gold has been dropping further and further, which is good. It's healthy. You know, gold is up about 75% this year, I think. And so this has to happen, of course. Um, so yeah, those are the two gold trades I placed. Now let's break down into the actual psychology of being in these trades, of course, right? Follow your trading plan, guys. Your trading plan is the best thing, to actually rely on when trying to find a winning trade and trying to find your bias. Mark out those highs and lows of pre-market, mark out key levels on the 4-hour time frame, and fair value gaps formed on the 15, 5, or 1. I call that the trifecta. Those three intervals right there, those are all you need for trying to find the intraday movements that will occur during the market session. Whether you trade London, New York, Pacific, it doesn't matter. You know, trading has been a little hard recently. Price action is very algorithmic. You have to be able to tell key levels and look at all these footprint charts, spot the imbalances, whether there's a lot more buy orders and sell orders. You have to actually look into why price is moving and what's actually moving these. With that SPY trade I placed the day before, we had a 1% bullish day. Now, when the red caliber news came out, price did drop down again to that 15-minute fair value gap formed. Now, right there, that could have been another play right there, waiting for that bullish fair value gap to be hit, fulfilled, and then you take your long entry from there. So that goes to show you guys, while you're in a trade, don't worry so much about price moving a little bit crazy or not your way. Stick to your plan, you know, respect your stop loss, respect your take profit, and most of all, respect the price action. You know, markets are changing forever. They're changing constantly every millisecond. You have to be able to adapt, and 90% of trading is you against yourself. 10% of it is the price action itself. If I had gotten nervous and I sold those SPY puts at those two pullbacks, then I would have sold at a loss. And so that goes to show you, don't worry if a trade doesn't go your way. You know, you would rather have an A+ setup and lose than have an A+ setup and be too afraid to actually take it when you could have won, or even if you did lose. You know, losing on a trade where you have an A+ setup, right? The money part isn't good. It's sad. You know, you get mad, but at least it was an A+ setup. If I could lose 10 times in a row, I would a million times over rather it be on an A+ setup than a random trade I took. That's a lot of like bad things that happen today. A lot of the reasons why people lose a lot in trading is because they randomly place these orders based off trend. You know, really it's a lot more than the trend. Of course, don't try to fight the trend, but you have to really take into account those strategies that you come up with, that you form, and you have to respect them. Also, journaling is very important. You have to be able to see what went right, what went wrong, how you could have improved that day as a trader, how your pre-market game plan could have been improved. And yeah, so moral of the story, keep trading, guys. I hope everyone watching this becomes profitable, or if you're already profitable, keep it up. And yeah, we have some crazy weeks ahead of us. CPI this week. Yeah, let's see how it goes.